Jefford here. All right, so today we're going to talk about a very important issue, and that is for investors, what are the factors you need to look at before you sign up with a stock brokerage and start putting your money there to trade. All right, or if they allow you to trade on credit, that's fine as well, right? So I think these are the things that as an investor we need to be very aware of, because if you do not go with the right broker, you could end up actually dissipating a lot of your potential profits. You could end up actually contributing a lot of your potential profits back to the broker, and that is not what we want. Okay, so today I'm just going to go through this very simple here. All right, it's by Money Spark. Okay, I take no credit for this article. I just feel that they actually put up very, very clear points on what to look for when you sign up with a stock brokerage. And I think, honestly, that is very good educational material. All right, and I didn't want to make this video too long. That's why. Okay, so question number one. How much is the comparison of investment brokerage fees? All right, so broker fees can actually come in a few types. Number one, it can be a fixed fee. It can be a fixed fee per trade. It can be a fixed percentage. Okay, it could be just these two types, either a fixed percentage or a fixed fee. Okay, so here they made a very nice comparison for you. Saxo Bank, DBS Vickers, Maybank Kim Eng, Phillips Securities, UOB Kay Hian, CGS CIMB, Standard Chartered, Citibank. Okay, there's a lot of different kinds of brokering fees here. All right, so you can see that there is a percentage attached. Okay, so obviously as of now, the lowest one is Saxo Banks, right? They have the lowest trading fee, and you can see that the percentage is always up to 50K, right? But broker fees alone is not good enough as a criteria to decide which broker you should go with. Another standard you should be looking at is, what is this prepaid thing? Okay, because you can see that what is the difference between custodian and CDP? All right, CDP means that the broker can pay for you first. So when you buy the shares, they pay for you first, then they proceed to deduct off whatever fees you incur on the they proceed to deduct off the amount of money you use to buy the shares. So CDP, Central Depository Program, I believe. Okay, so what this does is that it's linked to your bank account. So when you buy shares or you buy stocks, what happens is that the broker will pay for you first and they will do settlement with you later. All right. Now, custodian means that you need to deposit money upfront with the broker, and then they use that money to trade. Okay. So in other words, the difference between the former and the latter is that it's a matter of liquidity. So for CDP brokers, you don't need to come out with the money to buy the shares first. You can let the broker do the buying first. Of course, they have certain rules and regulations attached to that because there are certain risk regulations that they need to control. All right, but at least in terms of liquidity, from a liquidity standpoint, you're good, you're safe. It's better in terms of liquidity for you. But the custodian brokerages, they charge less. In general, they charge less, but you have to come out with the cash and put it with the broker. So if anything happens to the broker, like what happened to Lehman Brothers or Bear Stearns back in 2008, your money is gone. Okay, and it's very hard for you to retrieve your money. But of course, the probability of that happening is very low, right? It's very low. But of course, it doesn't discount the fact that you will have a liquidity strap. You'll be strapped in terms of liquidity because you have to put the money in first to buy the shares. It's really up to the individual what they prefer. All right. But at the end of the day, it depends on your personal preferences. Okay, so you can see right here, they also tell you what does custodian mean. So in other words, custodian means pre-funded. So you fund the account yourself. It's a bit like FX brokers already. You have to deposit the cash, deposit the money, then you can start trading. You can start buying and selling. All right, so CDP, Central Depository. All right. It doesn't say what a P means, right? But I think it's program. I believe it's program. Okay, but at least I got the C and the D correct. So you can see that for CDP, all right, they are directly linked to your bank account. So they will help you to come out with the cash first to buy the shares, right? To secure the shares. All right, but you have to pay them back later. Okay? Of course, number 3, honestly, point one is important if you are a regular trader, means you go in and out, in and out, in and out. And point 1 is important if you are investing and trading in very large amounts. Okay, like 1 million or 2 million per trade, you are almost like an institutional trader. Point 1 is extremely important because that percentage difference will actually translate to a big difference, okay, when you go in a large position size. But of course, just now in the chart, they already bracketed and said, oh, it's up to 50K. So it affects and doesn't affect, up to you, right? 0.08% in terms of absolute cash terms and 0.25% in terms of absolute cash terms. There's still a bit of difference there, but at least it's up to 50K. Okay, and I believe for the CTP side, unless you are an AI, that means you are an accredited investor, they will not allow you to take big position, extremely big position sizes through the CTP scheme. Okay, you might still have to cough up the money first. So it really depends on what the broker is. Now, point number 3 is very important for the small timers. Right, the retail traders, they like to trade in and out, scalpers or position trading. In other words, the word trading is more relevant to them compared to investing, compared to value investing. They trade more. So if you trade more, it's important to understand how the trading platform is like. For example, in Forex, we have a standard platform called MetaTrader. Most of the FX brokerages, they use MetaTrader, MT4, MT5, right? But actually, the popular one is MT4. Very few traders switch to MT5 for specific reasons, which I'm not going to talk about. I'm not the FX guy in my company, I'm a stocks guy, right? So in terms of platform, it's extremely important because if you trade day in and day out, if you're trading every single day, you need to make sure that the trading platform is to your liking. And to your liking, these 3 words basically mean that the platform needs to be user-friendly to you. You need to find the UI, the user interface, and the UX, the user experience, good. If you can't even execute trades fast on that platform, that means that platform is not user-friendly to you. Honestly, right? So for stockbrokers, because they don't have a standardized platform like MetaTrader, every single stockbroker has a very different looking platform. And because of that, you have to be able to examine the platform, like IG or that. You have to be able to examine the platform to see if you can execute trades on it with precision and easily. You cannot be fumbling whenever you want to execute a trade. That's number 1. Number 2 is this. People forget that nowadays, all right, of course now it's COVID-19. So we have a lot of time at home. We can afford to sit down in front of a computer like this to trade. But when life goes back to a new normal, where people start to go to work and you're a trader, especially if you're a part-time trader, not a full-time trader, most of the time you'll be executing trades using your phone, right? If you're executing trades using your phone, it is equally, if not more important, to examine the platform on the phone. That means the mobile app version of the platform as well. It cannot just be the case where you're comfortable with the desktop app, but you're not comfortable with the mobile app. It doesn't work that way. You have to be comfortable with both. Okay? So it says right here, right? User-friendly. Other factors. Okay, so this is a very good table, right? In terms of comparison, commission fees, how often you buy and sell, trading platform. It's a very good infographic. Again, Rubik's Academy, I do not claim any credit for this. This is by Money Smart. They are a very good financial blog. You should look at them. Okay? Custodian, the firm holds your stocks, pros and cons. All right? So this one, they tell you how to open a CTP account, right? You need to be at least 18 years old so that you know they are mentally mature. At least that's the definition of mentally mature. Okay. So basically everything at the bottom here is just a summary of what you need to do. Okay. But the 3 main factors, I repeat, number 1 is commission. Number 2 is the platform. Number 3 is whether it's CTP or custodian. Okay, so these are the 3 factors that I need to consider. I repeat, number one, commission fees. Number two, is it CTP or custodian? Because this affects your liquidity. Number three, whether you like the platform. Okay, of course, number four, which is the logical and common sense factor, pretty much commonsensical, I just invented that word, okay, is the fact that is the broker safe, right? You need to go for an accredited broker with a proper license. That they didn't put here because that one is logical. It is the due diligence that an investor needs to do before he or she goes and sign up with a broker. All right. So that's it for this episode. Thank you very much. I hope you tune in again to the next episode where I'll be talking about some very exciting stocks. All right. Thank you very much. Bye-bye.